Back now to the banking crisis after the collapse of Silicon Valley Bank. As we've been reporting, President Biden insists the nation's banking system is safe, even as regulators rush to prevent failures at other financial institutions. Here to answer questions is Michael Goldstein, a finance professor at Babson College. Thanks so much for joining us today.
It's a pleasure to be with both of you.
So, Professor Goldstein, the White House, as you well know, is trying to reassure Americans. The president made that statement this morning. However, sometimes when people say, don't worry, don't panic often enough, we maybe do just that, and we might become a little bit concerned. From your perspective, though, is there a reason for anybody right now to move their account from one bank to another?
Well, certainly if I had an account at SVB at Silicon Valley Bank or a Signature Bank, I would move those right away because I want to have access to them. And a few of the other banks that are in a little bit of trouble, I might move them as well. But just to be honest, this morning I was planning on moving my money from one bank to another, and I decided not to. I felt reassured, and I decided not to move.
Okay. So President Biden said this morning again, anyone with deposits at Silicon Valley Bank, also Signature Bank, will be made whole, that taxpayers won't foot the bill. So who then pays for that?
Well, honestly, I think we're going to pay a little bit. The banks themselves will pay by a extra fee that the FDIC is going to charge. But since all of us basically have money at FDIC-insured banks, we're slowly over time going to pay a little extra. But the good news is frequently you don't have to pay much, if anything, as long as everybody stops running. And the government has acted in such a way, I think that'll be the case.
Okay, so you were saying you're reassured. These bank failures are in part tied to the rising interest rates that we've all experienced over the last year or so. So with everything going on right now, the Fed meets next week. They had kind of been indicating that another interest rate hike was on the docket for that meeting. Do you think they might be less inclined to raise interest rates when they meet next week?
Well, if I were I want to highlight I'm not on the board, but if I were on the board, I'd probably still raise interest rates, maybe not a half point, but a quarter point, partly because, boy, if they didn't, everybody would think, oh my goodness, the banks are really in trouble. Honestly, I think this has been quarantined to just a few banks. And sometimes the healthiest thing to do when you're basically having a healthy economy is continue in the direction of having a healthy economy. I almost kind of don't want, although I understand the point, it is not great for banks if you raise interest rates again. You also don't want to signal we're really worried about all of our banks. That's also not a good signal to give.
All right, so maybe just a smaller increase, perhaps. We'll see what happens, of course. Professor Goldstein, thanks so much for being here with us.
Absolutely.
Yeah.